Hello, chart watchers, and welcome to this Friday, November 9th Market Watchers live show with your hosts, Tom Bowley and Erin Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, speaking of welcoming back, the sellers are back. We've got the Dow Jones Industrial Average currently down 249 points. The S&P 500 down 33.5. The NASDAQ down 143 points. And the Russell 2000 down 28. 10-year Treasury yield pulling back after nearing that 325 level, down 5 basis points today to 3.18%. Volatility index back on the rise, did move off of a pretty key area around 16. We'll talk about that in a bit, but it is up nearly 7.5% today. Consumer staples, a defensive area leading the market to the upside, continues moving higher. This uptrend remains intact. Utilities also having a strong day today. Those are the two sectors that are in positive territory, with utilities not far from a breakout above the October high. Broadcasting and entertainment stocks fallen back from earlier highs. We are still higher on the day, though, despite a lot of the selling in the market. And the reason Walt Disney came out with a very strong earnings report last night, did break out above $120 earlier, but has pulled back so far. Does have that false breakout, but still nonetheless up 2.09% today. On the downside, technology really struggling. You can see it down more than 2% today, threatening to go back below its moving average. Also, communication services having a rough day as internet stocks struggle. Activision reported not performing well today, down more than 10%, and that is leading the communication services area lower. All right, Erin, another week in the books. It's Friday. You got, I'm going to ask you, you got any big plans for the weekend?
Oh, I know. You always ask me. This weekend, let's see. Well, I know we have a Ducks game tonight, and I believe we have another one on Sunday. So it's going to be a Ducks weekend for us, for sure.
I was waiting. I'm expecting one of these Fridays for you to say, yep, I lined up to bungee jump or skydive or something like that. But
yes, you know me so well. You know that I would bungee jump or skydive.
Yeah. Well, anyway, we got some of the areas of the market that had been skydiving, unfortunately, that are starting to skydive again. And we got the right person in to talk to us about it later in the show. Mary Ellen, how are you doing this Friday?
Oh, I'm doing well. Thank you very much. Yes, quite a jumpy market here.
Yes. And last week you were on the East Coast and now you're back on the West Coast, correct?
I am. I'm back in the beautiful Southern California, but land of, unfortunately, the wildfires. So, yeah, it's...
yes, close to you, but fortunately not to me.
Yes.
My mountains have already burned. I don't think there's anything left to burn around me, so I think I'll be okay.
Well, I wish we could combine our weather because I'm on the East Coast. It's been raining like crazy here, and it's 51 degrees. So if we put it all together, wouldn't have the fires. Maybe I wouldn't have the rain. Who knows? But anyway.
Yeah. 80-degree weather, too. That'd be nice, huh?
There you go. All right. Well, Mary Ellen, I know you got a lot to cover later in the show on what's hot, what's not. So if you'll stick around with us, we'd certainly appreciate it.
You bet. Of course.
Great. Erin, what do we got for today?
All right. We got a jam-packed schedules coming up here. Tom, you got a workshop on Tuesday. We've got Bruce Fraser and Julius de Kempen are coming in next week. Following week, we'll have Greg Schnell. And then, of course, Thanksgiving is coming up. So there won't be any Market Watchers live. And as a reminder, I know Veterans Day is Monday, but the markets are still open. So we will still be here on Monday. So what's going on today exactly? Well, Mary Ellen, we just introduced her. She will be doing the What's Hot, What's Not with Tom. 10 and 10, Advanced Auto Parts is going to be our first symbol. And then we'll finish up with the sentiment update. I'll let you know what people are feeling and thinking and where the money is actually going and what is that telling us about what to expect next week. All right, Tom, let's go ahead and get started. I know there were some economic reports.
Yes, there were some economic reports out, and actually kind of surprised to see the 10-year Treasury yield reacting the way it is, considering that the October PPI came in way above expectations. 0.6% was the rise there. Market only expecting 0.2%. And then when we get to the core PPI number, still a 0.5% rise versus the 0.2 expected. So both those numbers came in much hotter than expected. So I would have thought maybe we would have seen some selling in treasuries, but I guess the fear in the stock market is actually sending some folks into the treasuries, maybe from a safety perspective. But I do think that number is pretty significant on the PPI, and we'll want to watch it. Of course, we'll be getting the CPI out shortly as well, and that'll give us some at least a different look, maybe on the consumer side as opposed to the producer side. Anyhow, 10 a.m. November consumer sentiment came out 98.3, slightly above the expectation 98.0. And when we take a look at that 10-year Treasury yield, this is what I was referring to. You can see this pretty big drop here, down more than 5 basis points, 3.18%. I still believe the uptrend remains intact. Perhaps we pull back to the 20-day. I mean, it's even possible we could go back down to the low back in late October. And obviously anything's possible. But I think in terms of this uptrend and looking for where the key areas of support and resistance would be, we could go back down, still sideways consolidate by having another low down around that 306, 307 area. I don't think it goes back down there, but who knows? We have not yet gotten the breakout, and we are reversing off of that high from yesterday. So anything goes at this point, I would suppose. And if the market, if the equity market continues to weaken, I do think that could lead more money into treasuries just from a safety perspective. Okay, as far as earnings, we did have a bunch out last night. Walt Disney, as I mentioned earlier, came in with a huge beat. Actually, Walt Disney reported some pretty good numbers, not only on the bottom line, as you can see there, but they also beat their top line number. Activision beat on the bottom line, but did not beat on the top line, and they also lowered guidance. That's why you saw that big drop, but we'll look at that chart again in a minute. CenturyLink, Mettler Toledo, Skyworks Solutions, Dropbox, all posted some better than expected numbers. I put Dropbox on there. This is a company that went public earlier this year. I believe it was in March. And the stock right out of the gate, I think, shot up to about $44, $45 a share, and now just recently went to $22 a share and was bouncing on the earnings report. We'll take a look at that here in just a second. But first, why don't we start off by taking a look at Disney? And I think you'll be, well, if you own Disney, you'd be pretty happy because it is avoiding some of the carnage that we're seeing in the overall market today. Disney currently up more than 2%. You can see breaking out intraday above that prior high, but that could mark a short-term top. Anytime we get those false breakouts and pull back down, I get a little nervous, but the day is not over. So if we finish like this, then I'm going to assume that we're probably in the near term, maybe going to take a move back down near that rising 20-day moving average, which had been holding the last 6 or 7 trading days, as you can see here. But if we finish strong today and get that breakout, I think Disney could certainly go much higher here in the near term. So let's see how we close today on Disney. But overall, looking pretty good there. ATVI, this is Activision. Showed you a little tiny chart of it earlier at the open. But you can see this stock was $84 at the beginning of October. And at today's low, it was under 54. Roughly, well, actually more than 1/3, probably about 35, 37% of its market cap gone in about 5 or 6 weeks. So it's been a very, very difficult period here for Activision. And I'm not seeing anything outside of maybe this being capitulatory, like some type of an exhaustive selling event. If we can finish with that hollow candle, maybe today's low will mark a short-term bottom, perhaps go back up and try to fill this gap back up to 62 and change. But after that, I would expect another move to the downside. That is a lot of volume. Remember, we're not even at the halfway point of the day. And Activision already over 20 million shares, which represents the highest volume we've seen in the last 6 months. And again, we're not even halfway point of the day. So pretty rough day so far for Activision shareholders. CTL, CenturyLink, they missed on their top line. They did beat on their bottom line, but I think everyone's a little concerned about those revenues. Big gap down, looking somewhat similar to ATVI in that we do have a red hollow candle on some massive volume. But again, do we finish there or not? Too early to tell. No matter how you slice it, down 10%, CTL having a rough day so far. Mettler Toledo, MTD, missed on their top line, beat on their bottom line, gapped up, but you can see overhead resistance at 620. We got to 618 and change, and so far reversing. If we finish with that black candle off of an uptrend, my guess is we go back down to the 20-day moving average. Skyworks, this is in the semiconductor space. And Skyworks beat on their top line barely. beat on their bottom line barely, and apparently it wasn't enough because Skyworks did gap lower. It's been in this downtrend for a while, continues to struggle, down 7% today and moving below that October low, so not good here. And then Dropbox, DBX, I mentioned. I'm going to go back here and let's do 9 months because I think it went public in March. Yeah, right here in March. Went sideways for a while. You can see the huge move up here to almost $44 a share in June, and it has been in this steady decline all the way down under $22, so a 50% haircut in terms of its market cap in about 4 months. But today, they did come out. They beat pretty handily on revenues, $360.3 million versus $352.7 million. They beat bottom line, 11 cents versus 6 cents. They got the gap up, pulled back, but it looks like it might be a character change. I want to see how this one finishes. Volume, of course, picking up. A couple of other stocks worth mentioning from an earnings perspective. Trade Desk came out. This is a stock that's done very well with recent earnings reports, as you can see from these gaps. Today, it gapped lower, but look at the strong recovery on the stock. It did beat on the top line barely, easily beat the bottom line, and they raised their Q4 revenue guidance, and the stock still gapped down about $10 at the open, but you can see buyers have stepped back up here. One of the darlings recently, Funko, FNKO, stock down quite a bit with its earnings. This one kind of surprises me. They beat their top line pretty easily, beat bottom line 27 versus 23, and then they raised their fiscal year 18 revenue and EPS guidance. Doesn't matter. The stock getting hit pretty hard to the downside. Yelp, I think, was downgraded. I know Erin will be talking about that one, I think, a little bit later. But Yelp did miss on its top line, beat on its bottom line, but then lowered guidance going forward and not performing very well today. But again, I think Erin will take a look at that one in a bit. The S&P 500, I'm watching this 2816 area. I think it was 2816.94 was the intraday high back in mid-October. We got within about a point of that as we came up the last couple of days. Couldn't get through, and now obviously turning back down. Money rotating back into defense as we sell off in the market. Something to watch. Another thing we got to keep an eye on, volatility index. Just as a reminder, the last two bear markets, the VIX never went below 16. Yesterday, it got down to 16.09 and is bouncing today. So for those who look at the fear factor and how it normally performs during bear markets, if you believe this is a bear market, we at least did get that bounce on the VIX where you wanted to see one. So that was something worthwhile and certainly worth noting. The U.S. dollar index, huge day yesterday, big rally, getting close to that October high. That does not show today's action, so I'll pull up the UUP real quick. You can see that that strength is continuing, and the UUP would actually close at a new high if we close where we are right now. That carries some negative implications for many of the commodities, including crude oil and gold, both of which have been struggling a bit of late. All right, Erin, upgrades, downgrades. I know you got several today. What's going on?
All right. Yeah, there's some interesting ones for sure. Let's go on over. We'll start with our upgrades, of course. Let's go ahead with BAM, Brookfield Asset Management was upgraded today from a neutral to an outperform. And we can see that investors seem to be happy about that with a nice almost 4% gain today for BAM. Got the PMO buy signal. I think it's looking pretty good. You can see this area right here could be considered, resistance that we've now just broken past. So I think that's looking pretty good for BAM. CRE was also upgraded today from a neutral to a buy by Goldman. And I think this is another good looking chart here. I love this double bottom chart pattern coming off of this big decline. That's a really nice big reversal pattern. I would expect to see now that we've gotten, and it is a double bottom because we have gotten the break above that neckline there with today's gap up and move. So I would be looking for a move about the size of this pattern, which is what, $6. So we should be able to at least get up here to that $46 level, maybe 47. But if you look at where the overhead resistance is next, it would be at that $44 level. But looking pretty good if you're into the chart patterns there. Noodles and Company, NDLS, Piper Jaffray upgraded this from an underweight to a neutral. Not much going on with this one on the upgrade. Still consolidating sideways after a really big hit that it took earlier in late October there, it looks like. PMO is trying to turn around, with this consolidation, but it just hasn't really been able to do much. Scooter has dropped. I appreciate the fact they're giving us an upgrade, but we can't even get above the 200-day EMA here, so not a fan. Owens, Illinois, OI, was upgraded today by B of A from a neutral to a buy. And it's down over 3%. So the upgrade was not impressive to investors. You can see the PMO has turned down below the signal line, which is especially bearish. Coming down off of an upgrade, you've got a negative situation here as far as the EMAs. They're configured as negatively as they can possibly be, with the slowest EMA on the top and the fastest on the bottom. So, we are getting ready to test some support here at that $15.50, $16 level, but I like to see those coming up, the PMOs coming up when I get involved, not going the wrong way. All right, a couple downgrades as well for you. MKC, McCormick & Company, was downgraded today by Credit Suisse from an outperform to a neutral. You can see investors not really bothered that much by it. It is very overbought. That would be my warning on this one. It's had a really great run since the beginning of July, but it is really starting to curve up in a parabolic fashion. And if you want to read more about parabolics, I know that Carl wrote, I think it was on Monday's article on Apple and parabolics. So you might want to check that out. But parabolics usually end in negative fashion in a very quick and painful drop. So just be aware. Anytime I get into a parabolic, if I'm holding one, I start using a trailing stop. Redfin was downgraded today, RDFM by William Blair, from an outperform to a neutral. And you can see that this drop is now bringing us to prices we have not seen in the year. So we'll go to a weekly chart to see what kind of support levels there might be. Well, it looks like we are at all-time lows right now for Redfin, and on the downgrade, certainly not going to help things. I certainly would be avoiding this one. And Yelp, as Tom, you talked about earlier, Yelp was downgraded today by 4 agencies: Raymond James, JP Morgan, Wedbush, and Deutsche Bank, all downgraded Yelp today on that horrible earnings report. I guess just really ugly. So we've got the huge cap down. We're looking at a move of minus 28.74%. Obviously, stay away. I just don't see any, there's just no point. It's not even a great short, in my opinion, because it's like chasing a stock that's running to the upside. You'll be chasing it to the downside, I think. So, boy, ugly chart there for Yelp. Just wanted to point out a couple of other upgrades and downgrades that you might be interested in. Axon, Cloudera, Transentrix, all of those were upgraded today. AKAO was downgraded by 3 agencies today. And specifically wanted to point out Skyworks, which I think you were talking about earlier, Tom, was downgraded today by 2 agencies as well. But Discovery, Michael Kors, I know Sangamo, you guys request that one for 10 and 10 a lot, and TripAdvisor, all downgraded today. So rather interesting check there for those upgrades and downgrades. And that's all I have. So Mary Ellen, I know you've got tons to talk to us about for what's hot, what's not. And I know Tom has lots of questions for you. So I'm going to let you take it away.
Yeah, well, I know Mary Ellen, 2 weeks ago, I guess everything seemed to be really not hot. And then last week was really hot. And now this week, it's kind of like the market's trying to figure out where in the heck it wants to go. But, I guess one of the big news last week was the election. Obviously, the market, is always thinking about the election as it approaches, and now it's behind us. Democrats took control of the House, and healthcare is a big topic, or was a big topic leading up to the election. So are you seeing any kind of anything with stocks in the healthcare space this week?
Yeah, absolutely. Healthcare was definitely one of the bigger impacts as far as the results from those elections. And we can see that with the Democrats coming in that the fear of the Affordable Care Act, Obamacare, being impacted has receded because of the gridlock. So that really had a big impact. What I'm presenting and showing here is the U.S. Healthcare Providers Index, and this is going to be those healthcare providers, those HMOs. And actually, the election, the biggest impacted ones within the HMOs were those that are Medicaid HMOs, because the thinking is that, of course, again, we're not going to see any shifts. The Republicans were very adamant about changing Obamacare, but that is behind us. And so the Medicaid-related HMOs were the most positively impacted. So let's go ahead and take a look at some of these stocks and see where they're positioned now after their big moves up. One of the, again, bigger HMO-related Medicaid-related HMOs is Molina Healthcare, MOH, and this stock gapped up 10% on the election results. So it's a bit trapped here, if you will. I've overlaid some simple moving averages. Your 10-day is this green line. We would need to see the stock break back above this 50-day simple moving average before it would be in a position to advance even further. But let's take a look at some of the other HMO stocks. ANTM is another one, and that's Anthem Inc. And this one is quite a bit more bullish in its position. The reality is this stock really did not get that impacted from the correction in the broader markets. So its big advance out of the elections has surged the stock to new highs, and that's really quite bullish. We have the MACD and the RSI also positioned in a positive fashion. CNC is another one. This one was up the most, up 11%. It too has broken back above this 50-day simple moving average. RSI is positive. Your MACD poised to turn positive. And we can take a look at other areas as well, because hospital stocks also rallied with an eye toward Medicaid payments for patients that normally would not be able to afford health care. The Medicaid payments will continue to go to these hospitals. So HCA is definitely the strongest among these. We can see the stock breaking out to new high, bucking the downtrend in today's market. It's up 1%. RSI and MACD are both positive. And then one other in that healthcare space, AMED. This stock is a healthcare and hospice company, and the stock was up 10% for the week after reporting very strong earnings. And we can see the stock is poised to break out of this saucer-like base in a very positive fashion. And then the drug stocks also are doing well. And we can take a look at Johnson & Johnson, this particular stock. There's also thinking that drug pricing will not be impacted, as had been threatened with the Republicans earlier in the year. So we can see J&J is charging to new highs, and it's doing so on some pretty decent volume. So this is another area that is being positively impacted by the elections. Pfizer is another drug stock. It's up 1% today, again, bucking the downtrend. These stocks also can be viewed as defensive. So we have a nice double-edged positive sword, so to speak, with these drug stocks, and also a lot of these healthcare with hospital and HMO stocks. So let's go ahead and move on to another area of the markets that have rallied quite strongly this week, and that is financial stocks. We can take a look at XLF. And we can see that financial stocks are up. They have, prior to today's action, they are up almost 3%. And one of the biggest winners within the financial stocks, I'll tell you, a lot of these oversold bank stocks are trying to rally, and that's not the most interesting area within within financials right now. We can see this attempted rally from deeply oversold position is not really taking hold. The real strength within financial stocks is within fintech area. We can take a look actually prior to that and look at Berkshire Hathaway. And this stock had a big move this week. It's up 6% on the week. And the reason is, the big story here is that they announced a $1 billion share buyback. And anytime that Buffett, as well as Charles Munger, anytime that they say that they announce and agree to a buyback of shares, it has to be agreed upon by both of these partners. And the reason that they are buying back shares is they believe that they are very cheap relative to their price. And this was very, very bullish for Berkshire, because the fact that these Buffett and Munger think the stock has value here has caused the stock to gap up. But the other reason Berkshire is doing well is because they did announce a recent investment in some of these payment processing companies. This is that fintech area that I talked about, and they've invested in companies in India and Brazil that are in the payment processing area. This is a very vibrant area within financials. Let's take a look at, for instance, Visa. This is a company that recently reported strong earnings. It's up 2% for the week. We can go ahead and pull up the daily and get a little more in the way of perspective, because the stock did break back up above that 50-day simple moving average in a bullish move. MasterCard is another one. And while these companies, you may think of them as very staid credit card type companies, they're actually revolutionizing the payment processing, the way payments are processed globally. There's a lot of demand, particularly within businesses that have been using checks to pay for their goods and services. And that's becoming quite outdated. So these companies that are able to create these payment processing platforms that businesses as well as individuals can use to speed up their payment, but also reduce costs. This is PayPal. It's getting hit this week. I mean, today it's down 3.5%, but overall the stock is exhibiting signs of strength. It's up 3% on the week. Let's take a look at a big winner here in financials. ONDK. This is on deck, and the stock announced earnings earlier this week, and they blew away their numbers. They guided higher. This is another financial fintech type company, but these guys, they lend to small businesses, and what they do is they charge anywhere from 9 to 13%, either for loans or lines of credit for these smaller businesses. Super easy to get qualified for these loans. And they are really finding a lot in the way of growth. Let's take a look at one other small lender, Green Dot. And this too is getting hit today, but they were up 20% earlier on the week. Again, earnings driven. They provide a banking platform for companies that don't want to enter into the banking space. So for example, Uber drivers, if these guys want to get paid for their rides, Uber has adopted this Green Dot bank-like platform. Apple Pay Cash is another platform that's powered by Green Dot. So again, these guys blew away earnings and sales. They did guide higher. Let's take a look at the chart of this stock, and we can see this particular move. The stock started to rally prior to reporting, and this is the bar that they, on Wednesday, they came out with their numbers. We can see that the stock did gap up. It was up subsequent to that, but take a look at this volume. That really is quite telling. That's what you want to see when a company comes in ahead of estimates. You want to see this increased volume. It's indicating that institutions are coming in, and it will help propel the stock higher. Now, today, of course, it is getting hit, but we are continuing to find the stock above this 50-day simple moving average, which is quite bullish. And then also your MACD has turned positive. So if the broader market backdrop were healthier, I would argue that the pullback would be a buy opportunity. So we can also take a look at some other areas that have been strong this week. And this next area is also election related. We can take a look at some of the cannabis stocks. They were in the spotlight again following the election. And the primary reason is because 4 more new states voted last Tuesday on the legalization of marijuana. And the thinking is that if more states are entering the fray, that marijuana companies are not going to go away. So while a lot of the stocks, well, the names I'm going to be reviewing here are fundamentally, they're not hitting their stride quite yet, but certainly the interest in these stocks is there. So we're up to a total of 32 U.S. states that have now legalized, whether it's for recreational or medicinal purposes. This stock I have here is called Tilray, T-L-R-Y. These are Canadian cannabis stocks that are listed in the US. And if we take a look at the weekly on this, the chart is not particularly overly healthy at this juncture, but there has been, again, renewed interest. The stock is up 15% on the week. CGC is another one I think we've reviewed here in this space before. This is Canopy Growth, and this is viewed as one of the sounder companies within the cannabis space. They're a little further along in their development. You can see the stock is has advanced. This stock is up about 9% for the week. Let's go ahead and take a look at it daily to see if the opportunity. And we can see on the daily that the stock's price is finding resistance at this 50-day simple moving average. So it's not currently in a position where it could, in fact, advance further. But certainly worth noting, CRON is another well-known name in this space. Also up, it was up 11% for the week. And it is, again, trapped below that flat 50-day simple moving average, so not overly interesting.
Hey, Mary Ellen, I got a question for you.
Sure.
You think, I mean, a lot of these stocks that you were just showing in the cannabis space made a pretty good run heading into the election on Tuesday. Do you think a lot of this pullback is just simply, now that the news is behind us, that it's just going to be a normal pullback before it goes higher? Or how do you view this pullback? In other words, is this a buyable pullback, or would you wait for these stocks to get through those 50-day moving averages?
Yeah, actually, that's a great question, because the buy on the rumor, sell on the news type of action. But interestingly, in this case, these marijuana stocks did, after the news, have these gaps up, which made them somewhat compelling, but they are not technically looking very attractive, again, because they are finding resistance at this 50-day simple moving average. So if you go back, you always want to look at history. We can go back to an earlier period with, for instance, CRON, where the stock in late August broke above each of these simple moving averages. Your RSI turned positive, as did your MACD. So this is the type of action you will want to see before turning bullish on any near-term prospects for these stocks.
Okay. As far as the consumer discretionary group goes, I know that there were some big names this past week that reported earnings, especially in that travel and tourism space. Do you have a couple of names for us there?
Yeah, absolutely. In fact, Erin talked today about TripAdvisor, and they were downgraded, but they had a very, very significant move. And prior to today's drop, they were up 25% on the week. And we can see this big gap up here, all earnings related. The company beat on earnings, beat on sales, and they are continuing to see growth. One of their big key areas is the hotel segment. That's where their big growth area is. They're continuing to see that. And then another stock in that space is Booking.com, BKNG is the ticker symbol. This is the old Priceline stock. And let's go ahead and take a look at the stock. This company also did come out with earnings, and we can see, but it's not nearly as healthy looking as far as the chart. But the stock did come in. They were up 6% after the earnings were okay, but they came out with excellent revenues, and they guided higher for Q4. But again, it is finding resistance at now. In this case, the blue line is your 200-day simple moving average. So it is a bit trapped here, not in any kind of a bullish position, but there are other areas within consumer stocks that are really doing quite well. All, again, earnings related. Let's take a look at Etsy, ETSY. And for those of you not familiar with this stock, this is a company that provides a sales platform for individuals who create products. A lot of them are craft oriented, and the company charges those sellers that use their platform a commission. And the company this year raised that commission from 3 up to 5%. So you can see the advance here on earnings was driven by that increase in their commission fees. So the company grew their earnings by 20%, and they raised guidance higher for next year. So the stock is really in an excellent position. You can see that the company gapped up and has continued to trade higher. The CEO came out. He talked about free shipping as a way to encourage buyers to come to their website, but actually only 20% of these sellers on Etsy provide free shipping, so they are finding no real pushback from that concept. That was an interesting item to note for other online retailers, that studies have shown that that free shipping really does not have a big bearing. But let's take a look at some of the other retail-related stocks that are rallying this week. This is Starbucks, SBUX. Take a look at this. The company came out with earnings. The markets liked it. The stock is continuing to climb higher. This is a company that earlier this year, actually not that long ago, they announced initiatives to close some non-performing areas. They've actually increased pricing as well, and all of that is having a very positive impact on their sales and earnings growth. And we can take a look at another food-related stock. This is McDonald's. Take a look at how this stock is just surging to new highs. Really today, again, ignoring what's going on in the broader markets, this gap up here that took place at the end of October is earnings related, and we can see again this big pickup here in the volume. Again, in telling you that institutions like what they saw, they're getting into the stock, and it's really helping to continue to propel the stock higher. At this juncture, it is extended. This area up here on the RSI is indicating that the stock is overbought. So that is showing you with an anticipation. We can go back to late October, that overbought area where it pulled back. So I would wait for a pullback for those of you that would consider potentially entering the stock. And then we can certainly move on to other areas of the market. And one stock that I'm going to show you right now, it soared 35% following earnings, and it's TWLO is the ticker symbol. This is Twilio. And the stock really came in with very strong earnings and sales. They're continuing to release new products, but as an aside, the company provides cloud. They are a cloud communications platform provider, and the stock also has been showing continued growth and continuing to get new clients. So this particular stock and the growth in this stock is pointing to a continued demand for cloud communications and software. So what I'm going to do now is show you some of those other software stocks that are really showing strength, particularly this week. This is Intuit, INTU, and the stock is up 5% for the week. And this company provides financial software for mid-sized companies. And they also are in that fintech, that area I talked about, helping companies pay without using the outdated checks. They have a payment platform that is being met with very high praise and high demand. And we can look at another, the largest bellwether software stock, and this is Microsoft. The stock's getting hit a little bit today, but this is a company that broke back up above this 50-day simple moving average earlier in the week, continuing to potentially try and form the right side of this base. We would need to see it close the week above the 50-day simple moving average to remain bullish on the stock, but the company's made great strides as far as moving away from their Windows applications, and they're a big player in cloud computing. We can take a look at another stock that is having a good week after having an extensive multi-year, actually 2-year move. The stock did get hit in line with the broader markets with software stocks, and it was up 11%, but we can see that the stock is getting hit today, in line with the broader markets. This is Ring Central RNG, and they are a cloud-based communications software platform. The company beat earnings, and they also guided higher for this year and next. And we can see this nice move here on the earnings on big volume. Again, we would want to see a break back above that 50-day simple moving average to remain bullish on the near-term prospects for this stock.
All right. Yeah, Mary Ellen. First of all, I just wanted to clarify, like when you see a stock go through the 50-day like that on RNG, if you decided you were going to pull the trigger and then the very next day you see it move back down below the 50-day, does that bother you? Is that something where you'd get right back out and wait till it gets back through the 50? I'm just trying to clarify.
Oh my gosh, that's a great question. Absolutely. Well, it's going to have everything to do with the broader markets. So if you see a stock such as RNG pull back and the broader markets are in an uptrend or having a really good day, that would be concerning. But at this juncture, if you own the stock, from my work, you would put generally about an 8% stop loss in there, because oftentimes we can see this big move here. That was an 11% move, and to expect the stock to continue to march higher beyond that would be a bit excessive. So at this point, the pullback is very orderly, 4 or 5%, but if we did get down further, you would want to initiate that stop loss. But the good news here is this 10-day simple moving average, this green line is in an uptrend, and that is bullish, because if the stock were to pull back further, once we have this in an uptrend, we can go back here historically and see the significance of an upward trending shorter term simple moving average. So I would not sell immediately unless your opinion about the broader markets has shifted. So it's going to have everything to do with the bigger picture.
Okay, excellent. I do know if we move on to what's not, because there are obviously a lot of things that were hot this past week, but one of the areas when we look at, say, communication services, the XLC, I was looking just a second ago, and it is at an 8-day low right now. So really not hanging on to all those gains that we've seen in the market over the past week or two. And I know internet stocks in particular have been pretty weak. What do you have there?
Yeah, you're absolutely right. XLC is really struggling here, and a lot of it has to do with their new classification. They have a lot of internet-related stocks. Yelp certainly is a big one. You guys talked about that earlier, and this is a stock that just had a horrific earnings report. The stock is down. We can take a look at another internet content stock, and that's Zillow. Z is the ticker symbol, and this is a company that they actually came out with numbers that were pretty good on the earnings side, but we can see the stock gap down, and it has everything to do with the company guiding they provided disappointment in the way of guiding going forward as far as their prospects for continued growth. So Zillow got hit. We can look at TRUE. This is True Car. This is another internet content stock that came out. They missed on earnings. Their revenues were good, but that earnings miss really hit the stock, and you can see that gap down. Some other internet content related stocks, MTCH. This is Match.com, and the company really was off to a great start. This is their prior earnings report here, and the company came out with the new products that were anticipated to continue to help the company grow. But take a look here at this gap down following their earnings release for the current most recent quarter. And the company did come out with numbers that were good, but again, management guided lower going forward as far as the growth prospects, and the street really took that to heart. MEET is another internet content stock. This is the Meet Group, and this is a company that also exceeded expectations on the earnings side, but the guidance by management was low. So the stock, you can see it's getting hit, continuing to look poised for more potential downside. And then we can look at one last internet content stock, and that's GoDaddy. And this is a company where sales soared, but they missed on the earnings. And we can see this big drop here. The company prior to this drop, their PE multiple was at 300 times their price to earnings multiple. So they really were priced for perfection. And the stock did, of course, drop subsequent to the report of their earnings.
Hey, Mary Ellen, we're getting some comments from the chat room. They'd like to see more of your chart.
Oh my goodness.
Scroll down just so they can see.
I am so sorry. That's wonderful.
No worries. Okay. They just want to be able to see the whole chart. So,
okay. And I'm going to go ahead and just minimize the chart so we can, of course, the beauty is going to be able to see the entire chart. So I'm going to go ahead and update that.
Oh, we can see it. It's just you need to scroll down so we can see all of it when you have
Got it. Oh my gosh, wonderful. Yeah, so let's go ahead and
very helpful.
Let's take a look at some other areas that are really not doing well this week. And that I can tell you, I would point you towards some consumer related. We talked about areas that are hot, but there are areas in consumer stocks that are not doing so well. And the first name that we can take a look at is going to be earnings related, Roku, ROKU. This is a streaming video platform. And the company here, we can see this gap down, and it is earnings related. They reported a decelerating Q3 growth, and they also are getting competition from other providers such as Comcast. So the stock really is selling off and not doing well. We can see the RSI is negative. Your MACD is trending downward as well. Let's take a look at another. Last week, I talked about the casino stocks. They had a good week due to holiday numbers being strong. This week, not so much. This is Wynn Resorts, WYNN, and the company came out with earnings. We can see this gap down here. They missed on their earnings, and they also, and management came out and they are looking at a questionable outlook because the Macau and VIP gambling outlook does not look so positive. And for those of you that follow global markets, the Chinese stock market has been in a bear market. And so there's anticipation that the fallout from lost capital in the stock market is going to impact these casino stocks. So we can look at another. This is one of the bigger players in Macau. MLCO is the ticker symbol. It's Melco. This company also, they missed on both earnings and sales, and we can see the stock got hit. LVS and MGM also got hit in the fray because they too have a presence over in Macau. LVS is Las Vegas Sands, and MGM is, of course, MGM Casinos. Let's take a look at another stock that is in this consumer space. This was a big winner going into the correction. You can see how just strong this stock had been. It's Medfast. MED is the ticker symbol. It's actually Medifast. And this is a weight loss company. And the company dropped, the stock dropped 27% after reporting earnings that were below estimates. So we can see this stock drop. The RSI now quite negative. It is now in an oversold position. You could see a little bit of a bounce, but this particular company is also in, I said that, weight loss. We can also look at Weight Watchers, WTW. This is a company that came out with earnings last week, and we can see this big drop. So that particular area within consumer, this weight loss beauty area is getting hit quite hard as the companies are not able to come out. They're not able to grow subscribers.
Yeah, I think I'd say their charts have slimmed down quite a bit.
That was a good one.
Sorry, I couldn't help it. The Fed came out yesterday, and of course, they said that they were going to leave the rates unchanged. I think that's pretty much what everyone's expecting, but they are still promising more rate hikes ahead. So I think maybe home construction is an area that, it's been under a lot of pressure in 2018. What are you seeing there?
Yeah, you're absolutely right. And although the Fed did not make any changes now, there's certainly anticipation in December. I believe 98% believe that there will be an uptick in interest rates. And we are seeing an impact. For instance, take a look at DHI is D.R. Horton, one of the bigger home builders. And we can see the stock really had been weak, but it did gap down. And the stock was down 5%. And they're citing rising home prices as well as an increase in mortgage rates as these interest rates are anticipating to tick up here. So that in turn is lowering demand for some of these housing stocks. And they're also citing an increase in material and labor cost as a problem. So the tariffs are really hitting some of these roofing and material company stocks. They are going to impact these housing. So we can also take a look at LGIH. And this is another one. It dropped 9% despite coming in ahead on earnings and sales. The stock is attempting to rally here, but we can see that these longer term, this is your 50 or 200-day simple moving averages, are very much in downtrends. So as these downtrends continue, these moving averages are acting as resistance. So any kind of rally, now it's below this shorter term 10-day. So any kind of rally attempts are very surely going to be met with resistance, certainly over the near term for this particular stock. One last thing I wanted to mention, because my time is up, but oil prices are now in a bear market due to a surge in oil supply. So we are seeing energy stocks being impacted. And then earlier there was talk about a strong dollar. And the strong dollar is, of course, impacting oil prices as well. So we can just see that there are a number of areas in energy that really are not doing well. This is Valero Energy. We can pull up any number of stocks in that area. And I'll go ahead and leave it at that.
All right.
Yeah, I would just say, too, with the crude oil, I saw an article today. It said that today would mark the 10th consecutive day that crude oil has been down, which is the first time that that's happened in the last 3 decades.
Yes, actually it is. It's historical and it's unprecedented. So, and there's also talk of how this lower oil pricing is going to potentially impact the economy. So there's a real trickle-down effect with energy. So hopefully we'll be able to see a bounce here.
Yeah, absolutely. Well, as always, it is a pleasure having you on here, Mary Ellen. You went through a lot. This is probably the fastest 30 minutes in the stock market. I think renamed this, I think.
Don't blink.
But it's awesome getting quick recap of a lot of things that have taken place over the last week. And we certainly appreciate you coming on here and joining us every Friday.
Oh, it's wonderful. Thank you.
All right. Appreciate it. There she goes. All right, Erin, what do you think? We ready for 10 and 10?
Well, let's see. I think we are. I'm going to go ahead and have you just go right into it. I wanted to add a few extra symbols here at the end. So let's just get started with Advanced Auto Parts, AAP.
All right. I got a really funny story I got to tell you first on this.
Okay.
So I got a buddy of mine who actually wanted to buy Apple going into the close right before Apple's earnings. And so this was a little over a week ago. I think it was on November 1st or what. I don't remember exactly what. But literally, he said he was trying to get in and buy Apple right before the close. So it was like the last 10, 15 seconds. He was out, he's typing. He buys it. He looks, the market closes. It's done. He looks. He bought AAP instead of AAPL. Well, the funny part is, well, not so funny, I guess, if you're holding Apple, but Apple went down with its earnings, and he accidentally bought AAP instead because he didn't type the L because he was trying to go so fast. And look what Advanced.
I guess he got fortunate in that mistake for sure.
Well, he said the next day, when it went up, when AAP went up and Apple went down, he's like, I'm just destined. He said, I just am supposed to have bought this stock. He said, I'm just holding it. So it's funny. I wish I could get that lucky.
Yeah. Well, what do you think of it now?
Oh, I love it. I love the stock. Actually, the breakout here, pretty good volume. You can see that the PPO had come down here and settled down right at the 0 line. It is now just starting to regain momentum. I think volume is pretty solid on this move to the upside. So this is one of those areas in consumer discretionary, which has continued to do pretty well, despite, not all parts of consumer discretionary, but there are certain parts that have held up very well. And Advanced Auto Parts has done very well. You can see the breakout here after putting these annotations. So after an uptrend, sideways consolidation, what do we wait for? We wait for the breakout. We're getting it. I would expect the stock is going to probably trade up into the low to mid 180s and then maybe pull back and retest this breakout level. But I'm bullish. I think the stock goes higher.
All right. Well, you're going to love this. The most popular symbol in the chat room, Apple.
All right, I swear we didn't plan any of this.
No, not at all.
This is funny. Okay, so let's take a look at Apple. Yeah, Apple, after the gap down, I'm not at all surprised. We went right to that prior gap support, and then we bounced. So now I think we're just in a trading range on Apple. So here was that gap support. That's that prior gap up from earnings back at the beginning of August. We gapped up, kept going higher. When we came back down after earnings, that second day, we went all the way down and literally came right to the top of this gap support and then bounced. I think right now we are probably in this range. I'm going to say 197, 198 to the downside, 213, 214 to the upside. You can see the 20-day moving average comes in here. You can also see many tests right at about this 213, 214 area for a couple of months. And then we went down, came back up, and then gapped below this level. So, I mean, you might throw gap resistance in there, which is up around 218. But still, I would be looking at this range. Trying to get back through that 20-day moving average would be step one. On this move back to the upside, it looks like Apple was running out of steam in terms of volume. So I suspect we're going to go back down and retest that 197, 198 area.
All right. How about another big name? AT&T. T, of course, is the symbol.
Yeah. Yeah, AT&T started to look pretty good there in September, early October, and then just kind of fell apart. And you can see the volume coming in on this move to the downside. Failure at the 20-day. Now I'm back to where I was a couple of months ago again with AT&T. I wouldn't touch it until it gets through gap resistance. I think pretty clearly that was a key support level from October on the bounce. And then we gapped up and sold off on very heavy volume from 31 3/4. So I think if we get back up there, I would be a seller at that level. I don't know if we get there because you can see already we are struggling to get through the 20-day moving average. Those are the two key areas. You've got to get through there. You got to have some volume coming in. And just to be honest, outside of maybe the dividend, when I look at AT&T, I just don't see a whole lot of capital appreciation, just kind of going sideways with a more of a downward slant right now. So for me, I would pass.
All right. Let's look at a gold miner, Yamana Gold, AUY.
All right. Not a fan of gold. I've been on here quite a while talking about, I believe the dollar goes higher. I don't think it's just, in the short term. I think the balance of this year into next year, I think the dollar index is going back, excuse me, to challenge those other highs around 102. And we're currently at 96, 97. So I think the dollar is going a lot higher. And I think that's going to keep a lot of pressure on commodities, which have not really participated in this bull market, at least not on a relative basis. And so I would continue to watch on this particular stock, AUY, this area. This was support on the way down. And now as we move up, this has been a key area of resistance. Again, I just think that there's too many headwinds for gold and for gold stocks. So I personally don't like it. But if we could get back through the 20-day moving average, that's what I would look for in terms of a first positive bullish step.
All right. Excellent. Okay, let's do AOS, Smith AO Corp. It's an industrial.
All right. A lot of selling, a lot of volume on the selling. We got a nice reversing candle there on big volume, went up, and now we're failing and rolling back over. I think we've now established the short-term high on that recent top. I think that comes in right here. That also coincided with this little attempt at a rally back in middle of October. But I'm going to say 48 and a half is going to be your resistance. And I think that low down there, just above 40, is the low that I would keep an eye on. That would be my support. And I tell you, there's this little support area right here off of this move to the upside. We pulled back at about $44.75 to $45. If we see a move back down below there, I think it could be a quick trip back down below 41 to test that support area. So not a fan here.
All right. Let's see, the next one is another AEP. That's a utility, of course.
All right. Well, defensive play for sure. Can't argue with the chart. If you're a little nervous about the market, and there's certainly reason to be, then I would say, utilities, real estate, consumer staples, you can still trade the market and not have to worry quite as much about, taking big losses. I think here on AEP, I would have the recent double bottom right there, 71.40 or so. These two these two pullbacks coincide with trend support. So I think if you go much below, say, $71, I'd be concerned. Otherwise, I could stick with it. I'm trying to break out today, and we've got a nice PPO. So I've got no issues here. I think AEP looks pretty good.
All right, another popular request, Visa. V.
All right, I think Mary Ellen covered that one along with MasterCard. But
Excellent. Well, we'll get your take on it.
Yeah, I would watch maybe for a island cluster reversal here. We got a nice move to the upside, but these three stocks, these three candles right here are on an island. So off of this uptrend, we gap up. We kind of in this little cluster. If tomorrow we see, or maybe a couple of days, well, it's not going to be tomorrow, but Monday or sometime next week, we get a gap down and we leave all of these candles up here in a cluster. That is an island cluster reversal. And then I would be looking for prices to the downside. The two key areas in terms of support, I would say after the gap up in to start November, you can see these pullbacks just around the 138 level, maybe just below. I think that would provide some support. That's where buyers have been stepping back in the short term. And then clearly from a longer term perspective, I think the lows that we saw back at the end of June, which were retested at the end of October, I think that's the big level to watch. But right now, and again, all these patterns that we talk about need to confirm. So this is not a reversing pattern unless we get that gap down. If we gap down, then I would pay attention to it. I'd probably look for some lower prices down to one or maybe even both of these price support areas.
Okay. Let's see. Another A, ADUS. This is a healthcare provider. I know Mary Ellen talked about some, but I don't think she covered this one.
No, but I like it. Light volume. So today only 27,000 shares. And you can see typically, a really heavy volume day is probably 250,000 shares or more. So it's not my cup of tea based on that, but I'm going to stretch this out to a year and see if this was an ascending triangle, which it was. So you got a prior uptrend in play. So let's annotate this. Here, I think it's pretty clear. There's your uptrend. Then all these patterns, I'm very OCD when it comes to this stuff, but I like use different colors for different things. Here we've got a pattern which right here you've got equal highs coming across. And if we connect the lows right here, we got rising lows. So off of an uptrend, you got an ascending triangle. You got the breakout and you got volume to pick up on this move, even though, again, volume is not particularly heavy on this stock. I think you're pulling back. I think current price, and then I would actually even consider a second entry at the 20-day if we pull back further. But I believe this stock goes higher. I like ADUS.
Okay, excellent. How about MTN? And that is, let's see, Vail Resorts, hotels.
All right, MTN, don't like it. It's been hot lately, but I think it's got a key area that it's got to try to get through, and that is right here. This was your gap up. You came back down, haven't had a close below about 267. We went through it. When we went through it, look at the volume, very heavy as we go below it. Now we come back up. We had a positive divergence, by the way. Higher PPO, lower price. That, when I see that, I look for a 50-day test. We have just gotten that 50-day test. We got the PPO back to the center line. I think this is if we were doing turning point right now, this would be a featured stock. I think MTN is at a turning point. I think we're either going to get that volume to break out above this level, or I expect that we're going to resume the downtrend. And I'm going to guess that the latter is what's going to happen here.
All right, cool. Let's look at a semiconductor, KLA-10 core. It's KLAC. It's actually a country music station here in LA.
Yeah, I think we're, again, getting a bounce to a key area of resistance. Semiconductors have continued to be pretty weak. You can see the low that came in back here in February. I think that was an important low that we cleared to the downside on heavy volume. And then I think you can kind of see this resistance area, gap resistance area. So let me just highlight this, try and get it somewhat close. But there is your gap resistance area. So there's the top of the gap, here's the bottom of the gap, and you got the 50-day moving average coming in. The stock, even though the PPO is looking pretty good here and rising, it's still below the center line. Many times you will see it roll back over. I think we need to get through, I'm going to say $100. Unless KLA can get through $100, I would expect the next move to be back to the downside, and I would watch the rising 20-day moving average. I think that's going to be critical.
All right. And that, my friends, does complete the 10 and 10. Here are the stocks that we just looked at. If you want to get these for your own chart list, just go to the Market Watchers Live blog and you will find them right there. You can save them to your own chart list. It's very easy to do. All right, time for our final market update. So let's see what's been going on. All right, I'll be using that new market view soon. I didn't have that set up today, but we will use that. Let's go ahead and refresh and make sure we have all the recent numbers. All right, not a good day, obviously, on the for the markets. We've known that since it opened because it has been traveling lower since the open. We're taking a downtrend from that high we had about midday yesterday, and we continue to move lower. Right now, we're looking at the Dow is down almost 1%, 0.92%. Down 242 points. NASDAQ is having a very difficult day as well. It is now down 1.88%. S&P 100 also struggling today, down over 14 points. And we can see the mid caps also having a problem, as well as the Russell 2000, the small caps. Both are also having a difficult day today. So we can see actually Russell 2000 is down just a little over 1.15%. We can see that the Canadian markets are following suit with the American markets right now, but it is starting to make, the TSX is trying to make a bit of a comeback here. It is moving sideways now after coming off of the earlier intraday low. Treasury yields are down on the day, but they are starting to come back up just a hair, currently reading 3.193%. UUP is moving to the upside, uptrending, and gold having a very difficult day. GLD gap down on the open and continued lower. It looks like we're going to maybe consolidate here near this intraday low, currently at about 114.39 is the reading. TLT, big move to the upside and now pulling back. You can see obviously very similar to what's going on with yields. This is the 20-year bond ETF. This is the 10-year Treasury yield, so not exact opposites. But anyway, we are seeing a pullback now on TLT on the 20-year bonds. USO, very difficult day, and as we were talking about, continuing to move lower and lower. You can see this declining trend just in the last 3 days on the 10-minute bar chart. And I suspect as we try to come back up here, we're going to fail and continue in this downward trend with another declining top to touch it. And that's all I have for my portion of the final market update. What you got, Tom?
All right. In my blog this morning, I did post a chart of the XLE, which you can see here. This goes back the last 2 years. But the big thing is just this drop that we had in the XLE. And then right here at this vertical red dotted line, you can see that the XLE bounced back to the upside. But if you look at crude oil prices, we haven't seen that bounce. We've just seen crude oil prices continuing to go lower. And I mention this is because if you look at the correlation over the last 2 years between the XLE and the crude oil prices, you see that for the most part, they stay near 1, but certainly almost exclusively in positive territory. And you can see because of this difference here and the fact that the XLE has been moving and crude oil prices have been moving down, that is showing that the correlation is beginning to drop and heading down below that 0.5 level. Still in positive territory, but obviously if this continues, that's going to be a problem. Now, I was looking at crude oil, and it is down below $60 today. I think at $59.90 or something last time I looked. And crude oil did go down back in February to a low around 59. So I think this is going to be a pretty important area of support on crude oil. But I think even if crude oil were to bounce, it looks to me like the XLE probably needs to play some catch up back down to the downside. So we are seeing weakness in energy today. It was the worst performing group yesterday. And if crude oil prices keep moving down, especially below that 59 level, then I think we're probably looking at an XLE that's going to continue to struggle. And with that, I know it's time for the Decision Point Sentiment Report. What you got?
All right, let's get that started right now. All right. And here we go. Decision Point Sentiment Update for November 9th, Friday. Let's take a look at what the market has been thinking about the market. What are investors doing and what are they thinking? We're going to go over the sentiment and the polls as well as the money flows. And just a reminder as we start our sentiment update, sentiment is a contrarian indicator. So when everybody is very bearish, that is bullish for the market, because usually once everybody jumps on the bandwagon, the wheel falls off, is what I usually say.
I just want to say your screen's not full screen.
Oh, okay. Let me fix that. Is that it?
Yep, that's it.
Excellent. I need to practice this before the show so we don't have this happen again. Okay, Decision Point Sentiment Update. So again, sentiment is contrarian. If everybody's very bullish, that's bearish for the market and vice versa. So that's what we're going to be looking at to give us an idea of what investors are thinking, and that can help us with, understanding the market more and the emotions behind it, because as we all know, the market really does trade on emotion. I think that's pretty clear. So knowing what's going on with sentiment, I think, is very important. So we're going to look at the 10-day moving average of the put-call ratio. I'm going to show you the American Association of Individual Investors poll. And we also will look at the National Association of Active Investment Managers exposure. So we'll see how the money managers are currently exposed to the market. I'll show you the RIDEX ratio, and that's going to show us those money flows. VIX, I want to show you as far as a short-term sentiment indicator, the way I use it for that. And then we will also look at gold sentiment. So I think there's some interesting charts. So let's get started. All right, so the first one is the 10-day moving average of the put-call ratio for the CBOE, equity, and OEX. As you can see right now, what I'm noticing is we have these lows that we've hit, which means we've had very bearish activity, and now we're coming off of that bearish activity. I've outlined here, I put in green the reading of 1, because with a reading of 1, that's pretty much neutral territory, because then you're evening out that ratio. So we're still below that. We are oversold and rising, and that is actually, I would consider that to be bullish for the market, mainly because we are coming out of oversold levels. And typically when you come out of oversold levels, you get a price rise out of it. Typically, obviously it's not perfect, but that's what we are looking at. One thing I wanted to show you and note is, when we're looking at the ratios now, spending some time below that 1 reading, that means everybody's quite bearish. And you could see that that reading has been really the oversold territory back in 2017. Not the case so far this year. We're now seeing some drops well below that on the OEX, or I'm sorry, the put-call ratios. So they're on lows and they're rising, and that is a positive. All right, the next one is the AAII poll. And basically you go to aaii.org and you can take the bull bear poll. You just click if you're a bull right now, if you're a bear right now, or are you neutral? And this is the tabulation of that poll. So we track to see when we get these expansions of bulls or an expansion of the bears. Because again, typically when you hit these extremes, that's when you should expect the reversals. So it took a little while on this one, but we did get that big reversal off of very bullish readings, highest we'd seen all in the past 4 or 5 years here. So we're not near that, but we are seeing the bullish sentiment rising, and we are seeing the bearish sentiment declining. So as you can see, as far as the ratio, and again, I've highlighted 1 because that is your even, that's your neutral. And right now we are a little bit above that. So we are seeing a little bit there's an increase in the bulls. It's not quite as high as we've seen it, but it is enough to be a little bit concerned. I was very surprised, honestly, to see this, because with the way everybody has been talking and the feeling out there amongst our viewers and everything, most people don't seem to feel real bullish right now. So I was really surprised to see these numbers. They came in on Thursday night. So that's, I thought that was quite interesting that people were feeling that bullish. So I think that could be a bellwether here as a problem. All right, the name exposure index here. We can see how exposed the big money managers are to the market right now, and we're seeing a reading of almost 65. Now, in the thumbnail, you can see we have increased exposure. Typically, that is that's bullish by the money managers, right? They're going to increase their exposure. But let's look at this in the context of, the past couple of years here, even in the last 2.5. This reading is still very, very low. That's still a very low exposure reading. So while I would read it, as increased exposure typically means increased bearishness as far as what's going on with sentiment, the fact that we still have very low readings here, I really read this exposure in more of a neutral category. We do have that rise, which is considered somewhat bearish, because that means the investors, the managers are getting more bullish. But ultimately, with a reading this low, I would look at this as mostly neutral. I don't think that they're feeling particularly bullish here, even though they're increasing their exposure, just based on that reading. All right, this is the RIDEX ratio chart. We follow the RIDEX ratio. This is something that Carl came up with Decision Point. This is our own. And what we do is, back when we created this indicator, there was a company called RIDEX, and they had a basket of funds that they managed. And every night they would report how many assets were in each of the funds and the money markets. Well, they still report, but now the funds are owned by Guggenheim. But we still are able to get those asset numbers and still are able to see these increases or decreases in assets in each of these areas. So what you want to note is these are the bear funds, this is the money market assets, and this is the bull and sector funds. So what's been going on as far as the money is concerned? As far as the money is concerned, we are still seeing some increase in the bear funds. Granted, if you look about what's happened just recently, it was only a little bit of a gain over the past week here, but ultimately we are looking at very high numbers here still on the assets for the bear funds, and we are still seeing a rising trend as far as the bear funds go. Same for money markets, and we consider this, the neutral money, but also bearish money too. They don't want to be in the market. So we consider that on the bearish side when we do our ratio. And I'll get to the ratio in a moment. All right, so what are we noticing here? Bear and money market assets going higher. Well, what's going on with equities? We are very low, and we continue in a declining trend here for the equity sector as far as assets go. We're at really, really low numbers right now, and that is really reflected in the ratio here. We're seeing readings now on the RIDEX ratio that we haven't seen in at least a year. I'll have to check this chart out for a little bit longer just to see if we've gotten this low, in the past couple of years. But within this past year, we have not. And again, this is, an inverted scale. So this is oversold, and we're starting to rise out of oversold. We have more money in the bearish funds, assets coming out of bullish funds. What does that tell us? Investors are bearish, quite bearish, even though they're taking polls out there that says that they're bullish. So watching where the money goes, investors are still pretty bearish out there. And this ratio being so low demonstrates that. And so we need to be looking for, we should start looking for a bit of a price rise here, at least in the shorter term, based on the money flows anyway. All right. But as far as the VIX is concerned, and this is an inverted scale as well, because I like to look at high readings as being oversold and very low readings as being overbought. Because again, we're looking at this in terms of sentiment. And, you know, a lot of times we do talk about the VIX as your fear index. And to me, that is sentiment, right? How fearful is the market? So when I look at this in the very short term, I'm looking at it from a sentiment perspective. And if we have very low VIX readings, people are very comfortable and complacent. And typically that's where you're going to see those price reversals. And it plays out over and over again. And if the VIX starts to get, high, at least on, in that 20 range, maybe a little higher in the 30 range, typically you get that break below that Bollinger Band, and then you should look for a price rise to the upside. And we did actually get that here. Came in after we got that puncture of that lower Bollinger Band. So right now we hit the top. We didn't actually puncture that upper Bollinger Band, but we did hit those we hit complacent readings around 16. We're starting to see them rise just a little bit here. I'm looking at this as bearish in the very short term. So that means, at least in my opinion, to look for a drop either on Monday or Tuesday to alleviate that and move that VIX a little bit higher. So I would look for some downside movement in the very short term, just based on the VIX. All right, let's go ahead and look at gold sentiment. I've decided to include gold now into the sentiment report because we do follow sentiment for gold, and that we do by looking at the premium and discount rates for the Sprott Physical Gold Trust. By looking at how much of a discount or a premium is being paid based on the shares that are being bought, that tells you whether people are bullish or bearish. And so the higher the discount rate, the more bearish the sentiment is. And that is typically bullish, right, for gold. But there are a lot of problems going on here for gold. And despite having very high discount rates, we got a rise here. And when we got these really high readings above 2, we did end up getting a bit of a price rise there. So we are set up, to get a bit of a bounce here in gold if you want to look at it strictly by sentiment. But I don't look at anything strictly by sentiment. So, looking at the price chart, looking at the PMO, which now is a sell signal, despite having very bearish sentiment right now for gold, I don't think it's bearish enough because we still are probably in for a bit more downside. When I did this, I made it into a line chart just to get a better idea as well. If this was a double top, and I saw a double top when I moved it to a line chart, you can kind of see it right here, but we had a lot of gaps. But we're now, this would be an execution of that double top, and that would imply a drop down to that 112 area as far as GLD is concerned. So I am bearish on gold. I agree with the bearish sentiment that is going on, but I think it's going to need to persist a bit longer before it's going to turn it around for gold. That's all I have for the sentiment update. So let's let's kind of put this all together. So the 10-day moving average of the put-call ratio is somewhat bullish for the market. Remember, it's rising out of overbought territory. AAII, we're seeing a lot of bullishness, loss of bears, and that ratio is moving higher, and typically that is bearish for the market. So that was a poll. Name, this is telling us what actual money is doing, the money managers, and their exposure is rising, but it is still very low. So I am still looking at this as neutral to bearish for the market. I'm not seeing that as a bullish thing just yet. Sentiment for, let's continue on. RIDEX ratio, remember that was shows very bullish for the market based on the money flows. Very bullish for the market. So I thought that was very interesting to see that. So you match that with the poll, and I suppose you can look at the sentiment itself as, we're looking at almost opposite readings here. We've got people feeling bullish, which is bearish for the market, yet their money is going into the bear funds and the money market funds. So as far as the cash flow goes, they're very bearish, and that is considered bullish for the market. So the pull and the actual money are really running completely opposite right now. And I haven't studied that to see what that implications could be for that. But it's something I'm now kind of considering looking at now that I do these reports every week. VIX, remember, it's coming down from the top of that Bollinger Band. I think that's short-term bearish. Gold sentiment, we're continuing at all-time highs, but it's very bearish sentiment, but you've got that sell signal on gold today. I can't get bullish, even though we're seeing all that bearish sentiment. So in conclusion, like I said, cash flow is showing bullish for the market. The AAII poll is somewhat bullish for the market in that, we're not seeing those extremes. We saw the rise on that ratio. But the fact that we really do see kind of opposite information from the poll and the cash flow, overall, one sort of overriding the other. I would have to lean a little bit bullish for the market based on cash flow, but at the same time, I think we could still see more bearish activity there. Name exposure, pretty much neutral, and I explained the rest. So that's all I have for this week's sentiment update. Hopefully it was helpful to you. And now it is time to bring up that poll and have the discussion, Tom. What say you for next week? And I know we don't have the close just yet, but what are you thinking?
Oh, yeah. I hate making a call with 2.5 hours to go.
Yeah. Well, you can always change it.
Yeah, I mean, so far, the pullback, I think, we got up to that 28.15 level, which was the high we saw back on October 17th on the S&P 500. We literally got up within a point and pulled back, and I would expect that. I don't think that this is anything that's extraordinary at this point. And on the way up, that 27.55, 27.60 area, if you remember, was gap resistance, that's where we had gapped above just a few days ago. Mm-hmm. So I'm thinking we're trapped right now between a 27.55, 28.15 area, which is about 60 points. Mm-hmm. And we're down toward the bottom side of it. But I don't know. There's a side of me that thinks the market goes a little bit lower here. I'm going to say that it closes lower next week.
Yep. I'm on board with that. It does seem that the rest of everybody is as well. And like I said, even though that cash flow is, showing a lot of bearish activity there, and typically that is bullish for the market, I think that we could see even more bearish activity there. So it'll be interesting to see where the cash flow is as we go through the week. And you can get that RIDEX ratio chart. It is in the DP chart packs, and I can put a copy of it in the recap for you as well.
Yeah, I think right now, as far as my trading goes, I'm very nimble. I'm trading much smaller positions than I normally would, and I am literally just going in position by position. I'm not anywhere near fully invested. I think that's until we get through that 28.15 level, I want to be somewhat cautious here. But I like I said before, I think this pullback is warranted. I think it's fine. Let's see how far we go. The VIX hit that 16-17 level, which is really important and is starting to bounce. Mm-hmm. So this could be a leg. I mean, it could be, more than just a day or two. And so I want to kind of watch and see how we finish today.
Yep, I agree. But so far, I'm going to go in lower for next week for sure.
All right. I don't blame you. I'm agreeing with you. There you go. You got the upcoming schedule for next week. I do want to thank Mary Ellen for coming in and joining us once again for What's Hot, What's Not. She goes through a lot of work to put that together, and I certainly hope everybody appreciates that. I want to thank all of you for being with us today. Please remember to complete that survey as you exit. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everyone. Enjoy your weekend. Be safe, and hopefully we'll see you back here on Monday. Happy trading.